So if you guys, I believe most of you are retail. So if you want any in-depth information from this thing that I covered today, go and talk to the right people that can serve you. All right. Today's topic, 6 subtopics. Usually I cover only 4 to make things easier. So point 1, 2, 3, 4. But today, because of this long topic, so I'm doing 6 subtopics. So hopefully they can help you guys. Okay, and go into a deeper insight, which what you see from my slides here could be a little bit different, a different perspective from Derek, but I could assure you that what we are seeing at the end of the day are almost 90% similar. Because earlier part when I was listening to Derek, okay, I have to confess I did not look at the slides because I was busy doing other things. I was still looking at some of my documents and my work, but the earpiece with me, I'm listening. And whatever he said, okay, I could vouch that 90% are agreeable, okay, to concur with what I think. Okay, first of all, I want to talk about boom-bust cycle. What is a boom-bust cycle? Take a look at this. Okay, hold on, let me shift the window. Okay, boom-bust cycle, this word actually is first written by George Soros in one of his books published many years ago, which I forgot what is that. And I went, because I myself, I was once a fund manager and now a corporate advisor. I went to research on a lot of US statistics and cycle for the last 100 years. And this is what I gather. So what you guys are seeing here are actually very gist and very concentrated things that we have spent many years of research and put it into one very quick lessons to let you guys understand. Okay, by the way, just to mention a little bit, digress, just one small part. I do have a trademark trading strategy called Power Wave, which I coached this method from 2006 to 2011 for 5 years. Then I stopped coaching. And Power Wave is actually was actually covered in my advanced workshop previously. And Power Wave is my proprietary trading techniques. It could be used on a time scale of 4 hours up to day chart, weekly chart, monthly chart, and could cover up to 100 years. So it's a counting and prediction using wave counts, okay, where we mention time versus price. This is very similar to the cycle analysis and what Master Derek had just mentioned. All right, but honestly, until today, I still don't know what is cycle analysis. I don't know what actually he taught, but every time when he mentioned about the numbers, I have this premonition in my mind that it is very similar to what I am seeing. So what I conclude is, regardless what method you have derived or you have picked up over the years, but at the end of the day, I think most of the experienced people, market veteran, are looking at the same thing. Okay, so talking about boom-bust cycle, we focus on looking at the USDX chart, which we call the dollar index chart. Okay, dollar index, because US is the biggest economy in the world today, and dollar is the most important #1 reserve currency in the world. So we always look at dollar index. Okay, you want to know what is dollar index? Go to Google and search later. Okay, write down in your notebook first. Dollar index is actually a counter measurement benchmark against 6 major currencies. Okay, and the 6 major currencies, if I can remember correctly, is the highest weightage is euros, of course, euro currency, which I think is about 70% euro, pounds, Japanese yen, Canadian loonies, Aussie dollars, and one more is Swiss franc. Okay, so 6 of them. So among the 6, euros weighs on the highest weightage on the opposite side, which means if dollar falls devalues, the most quickly and direct currency that will rise is always euros, and vice versa. Okay, when dollar goes up, then euro come down. So on the whole 6 currencies that measure against this dollar, there is an instrument called dollar index. So if you look at dollar index over the last 40 years, okay, last 40 years, you will realize that actually dollar index moved from the range of 70 to 130. Okay, whether you think it's too long or too short, the range. So for a lot of big macro trader, for example, like George Soros, or a lot of big family office in the Europe, how they actually look at boom bust cycle, or we call inflation recession, is purely studying and tracking this dollar index. And on the other hand, for example, if they're talking about a very long investment of at least 10 years to 20 years, what they do is when dollar index comes down to almost 75 before it hits 70, okay, anything below 80, they will start to launch a new fund, currency fund, that they will long dollar. So for the first few years, maybe you see dollar is going down, flatten on the bottom, then it start to go up. So when this investment vehicle goes on for 5, 10, or 15 years, every time when the cycle ends on the top side, when dollar index goes up to 110, almost 120, that's when all this big fund will say, okay, we are going to close up this fund, take all the profit, everybody take away the money. But if you want, now we are launching a short dollar fund. So dollar index at about 120 or 125 will start to move down again. So this is a very big, we call oscillating cycles, okay, which will take a few decades to form an up cycle and down cycle. All right, although we usually don't live more than 60, 70, or 80 years. But if you continue on this heritage of investment, it will make you very successful, especially those big European and American family office. Okay, so if you look at my commentary here, all right, 40 years range of dollar index actually moved from 70 to 130. And where is the median point? If you understand 70 to 130, the median point is exactly 100. All right, so which means every time when the market hovers around 100, it is considered a neutral trend, a neutral dollar strength. Above 100 is strengthening. Below 100, it is we call a weakening sign. And if you look at this month chart, okay, based on last month, November 2020, on this boom bust cycle chart, which is dollar index, okay, if you look at this part, okay, I hope you guys can see my cursor. Okay,
Yes,
I'm not
yes,
sure.
we
You can see, right? Okay.
Yes.
This purple line is what I call the EMA 200 averaging line. EMA stands for exponential moving average. The 200 averaging line is very important. If on a month chart, 200 averaging line, that means 200 months. On the day chart, EMA 200 means 200 days, depending on the time scale that you use. Okay, so if you look at this, EMA 200 is a very important support or resistance, okay, in every cycle. So currently the EMA 200 lines, okay, is resting at about 90, okay, 90, which exactly where we are now for the dollar index. Yesterday closed at about 90.30, if I'm not wrong. Okay, so now the thing is, we are going to track this. I believe at 90, currently at this level, there could be a bounce up, which I agree with what Derek mentioned earlier. Okay, I won't say it's a sharp rise, but there could be a quick retracement over the next 2-3 months by seeing dollar index from 90 bounce back up to 95, 96, 97. Okay, a bounce up. But eventually, we foresee that in the long run, currently now dollar, after this bounce up, is going to move into a weakening cycle. In any time 2021, just remember this, in any time 2021, if you see dollar index falling below this EMA 200 line on the month chart, below 90, that means the dollar is going to collapse, okay, and the US economy is going to be weakening, is going into recession. And when will this time come? Okay, Derek mentioned about August. I will not put a month, whether it's April, May, June, July, August, but my own consensus, I would think this will start somewhere second quarter of next year or the second half year. Okay, I won't say August, but I think it's second half year. Let me tell you the reason why. From the fundamental comprehension, okay, when the next president comes on board, regardless Biden or Trump, okay, I don't care who, but this new president will definitely roll out a new stimulus, okay, to help US economy. That means bring more money, okay. And when that happens, for a couple of reasons, number one, this new president, especially Trump or Biden, all right, will want to uphold his reputation and build a new, what I call a new image, okay, that they want to be epitomized by all the American voters. So look good, they want to print money, very generous. And secondly is, of course, US, if you don't print money, I think the government is going to shut down by end of this month because of the budget deficit. So they are going to do it by end of this month. And when a new president comes on board, I will believe there'll be 2 rounds, at least 2 to 3 rounds of easing. This is going to go back to the Obama time in 2009, 2010, 2011, that we call this the QE policy, quantitative easing. It will come back again. So which, if you look at this point 3, when dollar falls into a new cycle, I wrote there, Federal Reserve may implement even negative rates, sometimes second half of next year. Okay, second half. Now it's 0 to 0.25% for Fed funds rate. Once it goes down to below par, okay, gold will start to soar because negative interest rate. At that time, okay, what is going to happen is, I think stock prices may start to fall and weaken because of negative interest rate. The only commodities that will start to fly will be gold, and anything that will follow gold is only Bitcoin. I'm going to talk about Bitcoin, okay, on the second part of this. So this is a boom bust cycle. Okay, for this, we want to emphasize very quickly is there could be a sharp recovery in the next couple of months. Okay, but when the new stimulus is being rolled out, okay, dollar will start to collapse, especially in second half of next year onwards. That's where we see dollar weakens and gold will start to soar into a new historical high. That's the first point today that we are talking about, okay, on the boom bust cycle. Okay, now secondly, I want to talk about gold versus silver ratio. I don't know how many of you actually follow and study gold silver ratio, but I have done this for many years. Okay, what is gold silver ratio? That means how many ounces of silver can buy 1 ounce of gold. Okay, in equation, that means gold price divided by silver price. When gold divided by silver price, okay, how many silver in ounces can buy 1 ounce of gold? Okay, if you look at this gold versus silver chart, gold divided by silver, okay, then again, if you look at the last 40 years, why I always start from 40 years? Actually, I have chart over the last 100 years, but I think number one is really a bit too far back. Okay, no point going too far back. And secondly is because I use 40 years, starting from 1980, 1970s, 1980. Because 1970s is the time when the US abandoned the Bretton Woods Agreement and started to print what we call the US Treasury bonds and started to abandon gold, okay, gold pegged to dollars. And that's where the whole world changed their currency systems and the way how they measure inflation versus recession. So last 40 years is a good gauge. If you look at the gold divided by silver price ratio, okay, I'm talking about division ratio. For the last 40 years, if you look at the chart, it basically moves from the downside 30 up to a top side of 130. Okay. Then again, if you look at 30 to 130, where is the medium point? That means the midpoint is at actually 80. Okay. Then again, why this is very important? If you understand how this works, that means, okay, whatever above 80, okay, is a new cycle. Whatever below 80 is a new cycle. So if you look at this midpoint 80 and you look at this chart here, all right, every time when you see the gold silver ratio start to fall, okay, falling, especially fall below the medium point, fall below the EMA 200 lines, then coming down lower and lower, that is a time when gold price and silver price, okay, will always hit the historical high, hit the top. Okay, so it's inverse. Let me repeat. When gold silver ratio falls, okay, gold price and silver price separately will always hit a record high. Okay, you got me? Now, vice versa, if gold silver ratio start to surge and move up, okay, the gold silver ratio, that means why gold silver ratio start to surge? That means silver prices are actually increasing faster and faster. Okay, so that means silver is the division ratio. If silver prices increase tremendously, the gold silver ratio, okay, will start to decrease, and vice versa increase. Okay. Now, if you look at this, when gold and silver ratio prices both separately falls and decrease, okay, on the inverse side, that is when the gold silver ratio price move up to the top. So they always move opposite. Okay, now if you look at this, okay, this part, Gold and silver price made new high after US QE policy. This is the chart. It's a month chart, but from here 2009 to 2011. Okay, 2009 to 2011, just over the 2 years when President Obama started to cut interest rate and keep cutting interest rate and keep rolling out new stimulus. Okay, shortly within the 2 years, gold prices from 2009 started to rise from 860 US dollars up to 1,900 US dollars. Okay, I remember very vividly because I captured most part of the uptrend at that time. And silver prices move up from about $9.50, all the way up to $50. So gold price went to a new high, silver price went to a new high. Okay, that's when the new stimulus rolled out. Fed funds rate keep cutting. Okay, and gold silver ratio actually keep falling from the top to the bottom. That was 2009 to 2011. Then from 2011 onwards, gold prices started to fall, silver prices started to recede. Okay, separately, both precious metals started to fall, and that's where you see the gold silver ratio keep increasing and going up. So I wrote the comments here: 7 years widening ratio while gold and silver fall. So if you understand and capture this chart, okay, now you start to understand one thing. Okay, when the gold silver ratio chart falls here, okay, drops, okay, that means gold and silver price both rise. But when both precious metals rise, silver will always eventually run faster than gold. Okay, what do I mean by that? Because if silver prices cannot run faster than gold, the gold silver ratio chart cannot fall. So if gold silver ratio chart division ratio reduce and become smaller, that means silver prices must rise faster than gold. Okay, the classic example I'm going to talk about same time, 2009 to 2011. Gold price increased from $860 to $1,920, around that. If you calculate how many percentage of growth, 860 times 100% growth is about 1,700 plus. So $860, the gold prices went up to 1,900. Effectively speaking, the percentage growth is about 120%. But if you look at silver price, okay, from $9.50 and it rose up to $50 at the top before it came down in 2011. So effectively speaking, the equation tells you that silver prices in the same era of 2 years, 2009 to 11, silver gained 500%. Okay, from $9.50 to $50. Okay, so now the equation and the finale in this subtopic number 2. Okay, when gold and silver prices both rise, eventually silver will rise faster than gold. Okay, please capture this point. And what will cause gold and silver price to move up, to create new historical high and to surge to the moon? That is always when US start to roll out new stimulus. Okay, Fed funds rate keep cutting down. Okay, and when the whole market go into what we call a recession. Okay, when everything slow down, when the stock prices started to fall, and that's when everybody moved the money into gold and silver as a safe haven. All right, you got it? Okay. Now, on the other hand, if gold and silver prices started to come down in a recession mode, okay, in a recession economy, eventually silver prices will always fall faster than gold. So if you want to go on shorting, you have to short silver more than gold. Okay, gold is always what we call the market lead. Once gold go up or come down and lead the market, eventually it will be outrun by silver. That's why there is a saying in the English country, as quick as the quicksilver. Okay, silver is always supposed to be quicker and faster than gold. So how to finalize this slide before we move on? Okay, gold and silver now is going into the new commodity bull run from 2021 to 2022 to 2023. Okay, very short. I don't think it will run over many years. It will be about another 2 to 3 years only. But this run up, which I'm going to talk about, what is my expectation of the next historical high in gold and silver. But eventually, if you know how to capture silver, you're going to make more money than gold. Okay, let's come to the third topic today. what is alpha profits? Okay, alpha profits, that means a profit, extra profit that you make from comparing to the benchmark index. Okay, I give you an example. If today you say I buy gold for $1,700, and when the market rises, I set it off at $2,000. So if you buy a benchmark prices in gold, you make $300. That is called a benchmark profit. But what if I tell you, you can invest in something else and you can make alpha profits? That means when gold price increase, okay, gold prices increase from $1,700 to $2,000. Anybody who just bet on spot gold prices make $300 profit. But you invest in something else and you make $600 or even $900. So that extra profit margin by investing in the same benchmark is what we call alpha profits. So this is what I'm going to talk to you guys today. Very important. Gold is going up, silver is going up. Year 2021 is a golden era of commodity bull run. If you know how to put your money in the alpha markets, you're going to make 2 times or even 3 times or even 4 times more than the normal trader. All right. So after alpha, we talk about beta. What is beta? Beta refers to the volatility risk of the instrument, okay, compared to the benchmark. So that means if, for example, you're talking about gold price go up, silver price go up, which one has got more beta? Let me tell you, confirm it will be silver. Remember, because I said eventually when both go up, silver price is going to have a longer range of bull run than the gold. And of this longer range, naturally it will have more volatility. So that's what we call beta. Okay. So alpha profits in gold and silver in 2021, when they search, what are you going to bet on? Okay. For those people who trade on ETF gold or even on futures. Okay, futures is one instrument that you can bet on alpha. Okay, but on the other hand, all futures market has got beta as well, both alpha and beta. So today we are going to cover on this ETFs. It's an ETF listed at NYSE. Okay, what we call the UGL and the AGQ. Okay, so that means on this ETF, the same price that gold prices go up. Okay, and at the same price, if you would have put your money and buy a UGL ETF, okay, from the gold prices moving from $1,700 to $2,000, you make $300 per ounce. But for the same amount you put in UGL, you could be making $600 or even more, $700. Okay, there is a leverage, and we call the gamma factor, which is built into this ETF. That is why you can make more money. Then for the silver, okay, silver, the ETF is known as AGQ. Okay, so please take down these two instruments. It's very important. Okay, so what are the pros and the cons of a leveraged ETF? Number one, always remember, if you want to bet on a leveraged ETF, okay, I call this a leveraged ETF like the UGL and the AGQ, okay, you want the alpha profits, you only bet on the uptrend. Remember this. Because when the market both are moving down, number one, either correction, or number two, when it is downtrend. If you go on this UGL or AGQ, you're going to take out your pants. Because when they come down, they will come down 2 times or even more, okay, or even 3 times sometimes, faster than the underlying market, or we call the benchmark gold prices, silver prices. So you never get into leverage ETF whenever they are in a downtrend. Remember this, very important. So when on the uptrend, that you can identify them correctly, like exactly now it's going to move up. It will be damn good, okay? Very wonderful and powerful if you get into UGL and AGQ. So the alpha profits are ideal for uptrend. Number two, capital, okay? Say similar outlay to buying underlying commodity, whether you buy ETF in spot gold or you buy in UGL, it's the same. So same capital outlay, but you get at least 2 times more on the profit. That's a pros. And liquidity. High liquidity in the market, easy to enter, easy to exit with cash settlement, so there is no problem. Okay? We are always worried when we put the money in some market that we find difficulty to exit. So in this case, we don't have this problem. All right. But on the other hand, On the other hand, if you talk about leverage ETF like UGL, like AGQ, what is the cons? I can tell you. Okay, high beta in a downtrend. Okay, uptrend, no problem, because if we are all betting on long, we always can, celebrate, every Friday, buy drinks and say, oh, market is going up. I got floating profit, getting more and more. Or maybe you can take half and live on the other half and find new entry. But on a downtrend, remember this, on a downtrend, and you are betting on a leverage ETF, okay, you will always suffer very heavy loss, which is what I wrote here. Okay, high volatility, high beta, okay, risk factor. Potential losses may exceed your expectation on a downtrend. So please don't go against this leverage ETF, all right? Make good use of them and get them to make money for you, but don't throw money into there and start losing, all right? And last but not least, tolerance does not suit new traders because, yeah, remember this, I want to emphasize again and again and again. UGL and AGQ, they are not an investment vehicle. Okay, I repeat, they are not an investment vehicle. They are just a leverage ETF very quickly for you to double or triple your profits in an uptrend if you can identify the trend correctly. Okay, identify the trend. But don't expect to go in there and sit for 6 months, 1 year, or even 2 years and say, oh, it's an investment, because these are not stock. Remember, it's a leverage ETF. All right. So please take note of this and don't later get pumped by the market and start to blame me. Okay, let's take a look at UGL ETF, the chart. Okay, as you can see, the market recently is a day chart on UGL, has just fallen below the EMA 200. Okay, going into bear market. But let me tell you this, UGL is a leverage ETF tracking on spot gold prices. Okay, tracking on spot gold prices, which built in with a gamma factor that track at least 2 times of the potential profit in an uptrend only. Uptrend only. All right, I emphasize many times already. So in a downtrend, avoid, don't get in. Okay. Then on the other hand, don't look at the UGL chart to find a buy entry at the bottom. Most of the time you'll be wrong. You'll be wrong. Okay, incorrect. Why? Because very high volatility in the market. What you should do is continue the study on the spot gold chart. Okay, only when you find the gold prices on the spot gold chart a nice price to enter, then you find a similar entry in UGL. I hope all of you can understand that. Okay, I give you an example. Gold prices, I think 2 weeks ago, went down to 1760 per ounce, US dollars, 1760. And this is exactly what I have predicted. Okay, later at the end of the talk, I will tell you where to read my weekly update. I will predicted a bottom anywhere at 1750 to 1760 before it started to jump up. Okay, and it quickly just touched one day and it went up. Now it's about 1840. But don't worry and don't be afraid. Personally, okay, although I put a disclaimer, I foresee the market will touch this bottom again, sometime in December or even January. I call it a double bottom. Okay, so when it comes down again, for example, to 1760, okay, on spot gold prices, that's the time you actually find entry in UGL. Okay, so look at the underlying chart and find entry in UGL, as what I wrote here. Do not measure support resistance on leverage ETF chart to find entry exit. This is the wrong way. Okay, study the benchmark instrument, which is gold chart, to find the entry and the exit in UGL ETF. Okay, expect a 2 times profit in the next go up run. Okay, all right. So let's take a look at AGQ chart as well. Okay, AGQ has not fallen. You see, when AGQ leverage chart has not fallen below the EMA 200 averaging line, okay, but don't assume it's going to bounce up and it's a strong support. I can tell you, you are incorrect. You are wrong if you think that. If you want to find a bottom in AGQ and profit nicely from this, what you should do is wait for the silver prices to hit the bottom. Personally, I just want to give an outlook. Personally, I am expecting silver prices to hit somewhere at $20, which is going to be the next bottom. It could be this month, it could be next month. Once they hit $20, I think if you find that you want to go in, it's a nice price, okay, then I think at silver prices, trading at $20, you can find an entry in the AGQ. All right. So that is the similar way of finding entry in AGQ compared to UGL. Another thing that I just want to share with you guys, you know how good is this AGQ? Previously, 6 months back, when silver prices started to broke up above, I think $16.50, $16.50, went up 17.80, okay, and went all the way to $29, right? That was the time I entered AGQ. I bought AGQ at about 22 or $23 if I remember, okay, and I sold it at $50 over to 60. It went up even higher to $80, $70, but I sold it about 60. So I got a very handsome profit of more than 100%. Okay, I bought at 22 and sold out at 50 plus. So this is something I think all of you spend a lot of time to study, to find out, to understand this product, because I think, okay, it will do you a lot of benefits if you know how to make use of it. All right, so we have covered on the boom bust cycle, the gold price, the silver price, and how to create the alpha profit by understudying UGL and AGQ. Okay, very quickly, we are coming to the fourth topic today. Why Bitcoin? Okay, how many people here have got investment in Bitcoin? Not following Bitcoin, I just read and follow, no use. How many people already holding Bitcoin and playing Bitcoin? Show me BTC. I want to see how many of you. Come on. Let me see how many people already are doing Bitcoin games here. Anybody? Do we have a lot? I couldn't see from my chart. So George, are there a lot, George?
Yes, and it's still continuing to add.
Wow, that is super fantastic, and I hope this second part of the Bitcoin, I hope can do a lot of advantage for those people who are already in Bitcoin like me, or to those people who are just about to start to do Bitcoin. Okay, because Bitcoin is a very wonderful crypto asset, although it is virtual. Okay, I have to confess, I used to disbelieve Bitcoin and I condemn Bitcoin even on the national radio, and I behave like a stupid bum, you know. Then after that, what happened was I cut the story short. When 2016 now, when Bitcoin first rose up from I think it's $500 all the way to 19,000 plus, and I still didn't believe until two young friends came to me, and they made close to $50 million US. I fell off the chair. I really fell off the chair, and I didn't believe until I said, "Show me all your statement, everything," and I ran through. That's the time I started to realize that I missed a big opportunity. So I spent 6 months, I studied blockchain, I studied fintech, I studied a lot of things. And I actually also spoke on national radio and correct myself and say that, you know, it is not a scam. Whatever you don't know, don't assume it doesn't exist. So we go and learn. So I have been spending last 3 years following Bitcoin, learning. Okay, everybody got to learn, because nobody is a genius. Nobody is a born genius. No born champion, but everyone can be a trained champion. Okay, remember this, trained champion. And I am very proud to tell you that last year at this time, 1 year ago, December to January 2020, okay, December 2019, I have been tracking Bitcoin. I've been encouraging a lot of my friends, including myself, and we bought Bitcoins. I won't tell you quantity, of course. We bought Bitcoins below 5,000 US dollars. Today it's 19,000. You can imagine. That day, one guy just told me, say, "Brother, I just happened to log into my e-wallet. Hey, I got more than $1 million now, you know, in my Bitcoin. What to do? You know, he was hysterical. I said, keep it, because more to come. So this is the 开场白, opening talk that I want to let you guys, for people who still don't believe and condemn Bitcoin like what I used to do. So go and find out more about Bitcoin. Okay. US dollar for the last 4 decades or 5 decades has been trading and behaving inversely to gold and to the WTI crude oil, as I showed. Okay, XAU is gold, WTI is crude. Why was this like that? Because the US Federal Reserve purposely created, okay, I will cut the story short. I will not spend too much time explaining this. Okay, U.S. government and Federal Reserve created this U.S. dollar to be the world reserve currency and the world commodity trading currency, while U.S. control the biggest crude oil export today, and also controlling a lot of the oil wells in Middle East. And US also holds the highest gold reserves in the whole world today, with more than 9,000 ounces of gold. Okay. Oh, 9,000 ton of gold. Sorry, ton. Yeah. So they have the capability of creating. In Chinese, I call 铁三角. I always spoke in 958 by FM. 铁三角. What is 铁三角? We call the golden triangle. Dollar, crude oil, and gold. So in any time of the commodity, in any time of the economy, when there is an inflation, okay, inflation when gold price and crude oil price surge to the super high, okay, dollar will devalue. So they counterbalance each other, okay. So U.S. government will never have shortfall in their I call this the current account, okay. So in terms of surplus and deficit, because on one hand they may have deficit in U.S. dollar value, but on the other hand they have a big surplus in gold prices and oil prices in their reserve. And on the other hand, when the world moves into a Great Depression or recession, people may be losing jobs, things will be very tough, but the government will still remain their wealth. How? Because that's where the gold prices drop, the crude oil become, like now, abandoned, but dollar will become very strong. It will surge. As I mentioned in the first chart on the boom bust cycle, that's how it happens. So dollar is always used to counterbalance gold and crude oil. This has been around for last 5 decades. Okay, so now what we are seeing is a change and a transformation in the world economy. Why? Suddenly from nowhere, okay, in China, they started to research, develop, and even now start to manufacture electric vehicles, okay, since 2008 by BYD and many other companies today. Now even Tesla from US also doing that, okay. At first, all the oil exporting and oil producing countries hate all these companies, but now it become a trend. You cannot stop them. You cannot stop them. All right. So EVs will eventually replace from a little bit to partial to half or to all of the car population from one country eventually to the whole world. Okay. It's just a matter of time. I'm talking about whether it's 5 years from now, 10 years, 20 years, 30 years. Okay. Brazil has actually gazetted a law in the parliament. Okay. Until 2040, 20 years from now, in Brazil, they will abandon all the diesel lorries and commercial trucks on the road in their country, and half of their private cars will also abandon petroleum-driven cars. They will all go to EVs. And in France, I think in France it's even faster. The French government has gazetted a law in 10 years' time, before year 2030. Okay, they have to aim and target at least half of the vehicles on the road must become EV, regardless they are private or commercials. So you see, these are all the trend coming, which is going to protect the earth, save the environment, save mankind, save energy, and abandon dirty energy, save costs, whatever you call it. And we are all going into the green world. Okay, we call ESG. What is ESG? ESG stands for environmental friendly, socially responsible, and green environment. Okay, ESG, remember this. So now what will happen? As we know that EVs are going to replace all the vehicles on the road. All right. Crude oil prices will slowly be phasing out and being abandoned. So in the future, when US dollar fall, gold prices go up, correct? But what will happen if crude oil price cannot go up? Because the demand on global basis for crude oil is actually reducing and going off. You get what I mean? So crude oil is slowly losing its shine and the important role that it's going to play as a counterbalance instrument, okay, towards US dollar. So that is why we have Bitcoin. People may say, is this true? I strongly believe one thing, but I want to put a disclaimer. Bitcoin was created in 2008 and launched, okay? And the creator is called Nakamoto, Satoshi Nakamoto. But until now, nobody could track or could find who is this person. It's fictitious. But let me say something, it's not a fairy tale, but I strongly always believe, I won't say who, but Bitcoin was purposely created with a purpose by a group, an ethnic group of people, whether it's government or it is a group of people, you know. Let's forget about bickering on this. But eventually, what I want to emphasize is over last 3 years, especially after the last Bitcoin hit the high at 19,800 US dollars one piece and started to come down. Okay, I gradually found one very phenomenon in the market, which is while crude oil prices is slowly losing the shine. We all know crude oil prices actually this year May went down to negative. People all got no confidence. Crude oil prices are WTI crude. The highest it can go by end of this year, end of this month, which is end of 2020 or even early next year. I won't see crude oil prices going above $50. 50 is the max. Then it will start to come down. But what is going to replace WTI crude will be Bitcoin. Because if you clearly look at Bitcoin price and do a little bit of correlations, like what I did for last more than 2 years, 2 to 3 years, I realized one phenomenon. Bitcoin moved exactly inverse to US dollar, and the correlation is getting stronger and stronger and even stronger. And that actually inspired me, okay, to believe that Bitcoin is able to replace WTI crude anytime in the future, which means US dollar is always needed to be counterbalanced by two opposite instruments. That used to be gold and crude oil. But in the future, after 2021, I think it could be gold and Bitcoin. Okay, if you believe what I say and understand what I'm trying to give you, the equation, now we rewind a little bit. Earlier, I mentioned about dollar eventually is going to collapse in year 2021. Okay, especially after the second half year, going to negative interest rates. And when that happened, gold prices will start to fly to the moon, which is why we call the commodity, the golden era of the golden bull, the era of golden bull in commodity prices is coming. Okay, but at the same time, when gold prices fly up to the moon, Bitcoin will also start to fly up to the moon. Okay, because you will not see WTI crude prices going back to $100 a barrel. I can bet my last penny it will never happen. Because for so many years, it's struggling at $60, $70. What makes you think it goes back to 100 now? There's no way. Especially with EVs coming up from China, from Asia, Japan, and from Europe, and even in US now with Tesla. So eventually, Bitcoin will become a very important instrument. Okay, but then again, when people talk about Bitcoin, there are a lot of skepticism, which I mentioned here. Bullish trend after halving process in May 2020. Okay, these are the good things. If you want to know what is halving process, what you can do is you go to my YouTube. I give you the link at the end of this presentation. You go to my YouTube. I did a podcast about 20 minutes on Bitcoin halving session. Every time after the Bitcoin went through a half session, the prices will start to surge to the moon in the next 24 months, which we are now already seeing that already. All right. So you can go and look at my YouTube video. All right. Then on technical part, need to be technically savvy in building a rapid wealth. For people who want to invest and play Bitcoin, you need to be technically savvy. You must know how to protect against scam and against being hacked. You must know what is an e-wallet, hardware e-wallet, and you must know where to go to the right platform, which is why you need somebody to train you. All right. Otherwise, a lot of people find it very difficult. But then again, I want to emphasize, being difficult does not stop you to make your mega wealth. All right. If you believe in Bitcoin and Ethereum. All right. So pairing, what is pairing? Bitcoin is the largest market cap crypto asset in the world today. Number one. Okay. I can't remember. I think they should have about more than 200 billion US dollars in the market for the whole Bitcoin on a global basis. And the second largest crypto asset is Ethereum, okay, ETH. So Bitcoin will pair with Ethereum exactly just like gold price pair with silver price. Remember, I talked about the gold silver division ratio. Bitcoin to Ethereum also have the same division ratio. All right. Then, of course, if you talk about the cons on the bad side, yes, high beta, high volatility, then banking issues. Okay, today, if you said you sell maybe 10 Bitcoins, you get to 19,000 US dollars, you want to encash to the bank will ask you where you get the cash from, then there are a lot of problems. Okay, although it's legal money. So for banking issues, hard to account the wealth and may not be served by the bank unless you got very good relationship. Okay, or we will tell you how to do that. Then of course, scam prone, need proper education and led by experts for such an investment. As I mentioned, in the crypto world, it is genuine. Trust me, it is real. But then there are a lot of scams. People always fall into the scamsters and start losing the money. That's why it's a waste. All right, let's take a look at this. Okay. Give me a second. Okay. In this, we talk about the gold divided by silver versus Bitcoin divided by Ethereum. We call this the division ratio. All right. Just to recap a little bit, earlier I mentioned gold is always trailed closely by silver, where Bitcoin is always trailed closely by Ethereum. All right. So just a revision. I mentioned before earlier, in a boom cycle, when precious metals both rise, okay, silver will always surge faster and in more multiplication fold than gold. On the other hand, when precious metals both fall in a bar cycle, silver prices will always plunge faster and deeper than gold. And this is exactly applicable, okay, same towards Bitcoin versus Ethereum. Okay, they are the same. Okay, let me show you here. Okay, if you look at this part, currently gold prices is trading at about $1,800. Last week it was trading at 1,750, which is I wrote here. Okay, what I foresee, I just give my disclaimer first. I want to do a prediction. I forecast in the year 2021, which I don't know which month. Most likely will be sometime mid-year next year, 2021. I foresee gold prices will hit the first high at about 2,400 US dollars. Okay. I remember this prediction is slightly lower than Derek. Derek mentioned about higher, like 2.6 or 2.7. Okay. But personally, I think I aim at 2,400 US dollars. Okay. Then after that, as I mentioned, there could be a dollar surge sometime next year. That's when gold prices will correct again. But going to the year of 2022, okay, gold prices eventually, from my wave count, power wave, I have predicted that the ultimate top of gold prices in this era, okay, in the era of year 2020 to 2030, in this decade, the high will be anywhere around 3,500 US dollars. Okay, 3,005. So if you talk about eventually within the next 2 to 3 years, all right, gold prices moving from 1,750 to 3,005 is about 100% growth. But if you look at silver, as I mentioned earlier, if you remember, I'm talking about $20 is a good bottom to pick, and I strongly believe it will come. And then this era, in the next 10 years, I foresee silver prices will hit $60. Okay, on the same top when gold prices hit 3,500 US dollars. Okay, so if you look at how many percent of multiplication in silver from 20 to $60 is 300%. So am I right to say silver has got more potential than gold? And if you still believe in me, go and do a lot of homework. Okay, start to pay a lot of attention to what? AGQ. Remember that, the leverage ETF. All right. Then on the Bitcoin side, okay, currently it's trading about 19,000. Okay, if the market goes up 3 times, high chance we are going to see 57,000 in year 2021. Don't ask me when. Okay, I will believe it's second half of the year. Okay, next year 2021, which is 300% growth. But this is a very, I would say, it's a very conservative prediction today. Okay, because I speak on, I'm invited by Derek and I speak on timing and you. But personally, when I speak to my student and my own investors, my friends, I made a very bold prediction. I even spoke this on the national radio. I would foresee that sometime before the first quarter of year 2022, okay, listen, first quarter of year 2022, which is another 15 months from now, I foresee Bitcoin will hit 100,000 US dollars. Okay, so I'm writing here 57,000 is only next year, only eventually the higher top, okay, in 15 months from now is 100,000. Then for Ethereum, currently it's trading about 600 US dollars per piece. Okay, I foresee easily it will go up to 6,000. My top side is about 8,000, but I will just conservatively put at 6,000. So if you calculate the number of, or the number of times in multiplication, you're talking about a 300% growth versus 1,000%. So now it's up to you to think, do you want to invest in Bitcoin or Ethereum when both are in the bull market now? All right, this is for you guys to go and do some homework again. Okay, as I mentioned, right from this beginning, we have already done a non-disclaimer and a risk disclosure. So everybody got to do your own homework. Okay, this is the ratio chart of Bitcoin divided by Ethereum. All right, if you look at this. Okay, so it's the same thing as gold divided by silver. Remember this. So when this chart's division ratio, the prices fall and go down, that's when Bitcoin and Ethereum will shoot up and continue to move up to the top. Okay, remember this. So what I wrote here is the ratio is bearish now, while Bitcoin and Ethereum tend to soar very soon. So both are bearish. Why? Because you see, this chart, the division ratio, has been strongly resisted by the EMA 200 averaging line. Although there's a false break here, false break here, false break, but now it's going down. So the chances of punting down is very strong within this channel. If you look at this, I draw a top line, right? Resistance and a support. This, what I call a channel line. Okay, now it's at the top of the channel. Once it starts to go down, that's the time when Bitcoin and Ethereum will start to fly. So falling below will indicate that Ethereum eventually will rise faster and further in more folds of prices than Bitcoin. So until now, I hope you guys really understand, what is the gold versus silver ratio, how you gauge, and also understand Bitcoin divided by Ethereum. And from these correlations, all right, understand the division ratio chart by going down and how you can actually benefit in both Bitcoin and Ethereum, whereby Ethereum will escalate faster than gold. Okay, last part. I hope that I am on time because I'm controlling the time to finish by 4:45. Because every Sunday, I have to confess, 2 to 5 o'clock is my afternoon nap time. Every Sunday without fail, 2 to 5 o'clock. This is the best time for me to sleep. Only for today because of Derek. Okay, so Derek got to buy me a drink after this. Okay, last part, your wealth. 2021 starts from now. If you don't plan now, probably you're going to miss a big opportunity. Why you have to plan now? The answer is simple. Brothers and sisters, this is already December of year 2020, the final month of this year. Christmas is around the corner. If you don't plan now, when you want to plan? I also don't know. Don't wait until the bulls start to run and you can only smell smoke. Then you say, hey, I start to plan now. Am I too late? Okay. Although I always say nothing is too late, but you must really capture the right timing. Okay, where I call the time versus price. Okay, in any chart, the two parameters, right time and right price. So how do you plan your wealth in 2021 starting from now? First of all, expect at least 2 times a US stimulus. As I mentioned earlier, at least 2 times. One will be by end of this month. Okay, the US Congress will push at least a 900 billion for the budget to approve. If not, US government will shut down because they are already falling short of budget. And this 900 billion US dollars is also to help at least 12 million Americans to regain their job. If not, they'll be going jobless. Then the second stimulus will be after the new president comes in January. Sometime in February, he will sure announce that he's going to roll out stimulus. If not, the country will go bust already. All right. So with these 2 stimulus, or even going to the third one, dollar will be valued. Okay, when that happens, gold price will fly very soon. So start to plan your gold price. Okay, pick a bottom. So the new era in commodity boom cycle is right now at our doorstep. Not at my doorstep, not at your doorstep, at our doorstep. At the doorstep of the people that could see it and they could believe it, and they start the plan now. Okay, so when boom cycle starts, what do? As I mentioned, okay, look after the goal. Please jaga, I call jaga, huh? Jaga, huh? Okay, jaga and cut the entry of buying gold at bottom, UGL or silver, which is the AGQ. Then next thing is the Bitcoin, Ethereum are your four main focus. Okay, you're gonna pick stocks. Yes, of course, you must know what to pick, when to pick, and that one you're gonna follow the cycle analysis and timing and you, and go back to Derek. Okay, he will guide you. And major stock index will correct from record highs. Okay, which I think that will be later part. I'm talking about 2021, not January. Okay, so eventually, so initially when stimulus are being rolled out, stock prices will go up. But sometime, I believe sometime, especially May, June onwards, stock indexes, US, Dow Jones, S&P, Nasdaq, all will start to fall. Okay, I believe not so soon yet, not in the first quarter, but in the second quarter, like what Derek mentioned. Then the global consumption on crude oil will reduce. Possible market plunge in the second half of 2021. This slide was prepared last week, so it is not pakat and arranged with Derek that we speak the same thing. All right, he has not seen this slide.
Yes,
right?
never.
Never. Yeah, you see, he said never. So possible market plunge in second half 2021. Okay, avoid over leveraging assets. That means what? Don't over leverage yourself. Too much money that you loan from the bank, buy this, buy that, invest on this. Okay, do calculated risk and avoid uncalculated risk. Okay, then when US cut rates again, bonds and gold will fly. I would personally presume that year 2021 is the year when Fed will crazily go into QE again, quantitative easing, by cutting rates. How many times? I don't know. That is the reason why earlier I mentioned eventually I will not be surprised if Federal Reserve start to implement negative rates. But when this happens, I believe it will be second half of the year. All right. Last slide. Thank you very much for following us. And these two links, I hope you guys can keep track. And I want to tell you it's free of charge, but anybody want to pay me, go ahead, I will take. Okay. Follow us on the Facebook. Every weekend we will update market outlook for the coming week. Okay, under facebook.com/S3 Traders, especially on gold prices. You can take a look. Follow our OTOP episodes. There's a wrong spelling. It's OTOP. OTOP stands for one target, one purpose. Okay, I have a YouTube channel that I load up on every weekend. I will select only one market instrument per week. It can be a stock, commodities, ETF, or anything from anywhere from the world. Okay, and most likely every Monday at 9 a.m. once it is uploaded into public viewing for free. Okay, that week that instrument is likely to rise, but you must control your risk properly. All right, and where is the link? Okay, at youtube.com/DW channel 2020. All right, so this is the end of my presentation, and 4:45. I'm looking out at my clock on the wall. I think I'm on time. I'm going to pass the time back to